Hey everyone. Well, they did it. They reported earnings and here we are. It looks like the stock isn't behaving so well. Certainly not as well as we'd hoped. Now, I came on a few days ago and said they're probably going to beat, but the stock may not react well based on the run up into earnings. There was just a ton of bullishness. Valuation was getting progressively more and more unattractive. And it looks like that's what we're seeing tonight. Now they just ended the call. And before we get into the model specifically and their guidance here, I just wanted to go over some positives and negatives right here, right? The revenue beat came in at 30 billion. Consensus, well, I was at 29.1. I think consensus was around 28.7. I think the whisper number where the buy side investors were was between 29.5 and 30. So it came in right around where institutional investors were already expecting revenues to come in. Now, as far as the revenue guidance for 32.5, again, that's ahead of consensus, 31.7. It looks like I was at 33 billion for the quarter. And after going through the model, I'm taking my number up to 34.5. So the revenues were definitely positive. Not entirely, who didn't expect positive revenues? Who didn't expect a revenue beat? They can't ship to customers fast enough. That's how white hot demand is. No surprise there. A big surprise, certainly for the market. I feel a little vindicated. I'm not going to lie. I know nobody wants to hear I told you so, but the gross margins deteriorated meaningfully. The gross margin came in at 75.7. Okay, that is a 320 basis point deterioration from the prior quarter. Not great, right? It's getting more expensive. Shouldn't come as a surprise. But I know I, for one, was getting a lot of pushback for some of my estimates where I had gross margins deteriorating over time. It's certainly something to expect. Whenever demand gets white hot, everyone and their mother is going to demand a higher price, including your suppliers. And of course, competitors are going to start coming in, and that's going to limit NVIDIA's pricing power, right? So NVIDIA is not going to be in a position to just pass along whatever price increase comes their way. Now, the guidance is where it gets even worse. They guided to 75% gross margins, adjusted gross margins next quarter. That's not terrible. It represents continued degradation. That would be 70 basis points worse than what they just posted. The worst part is that they're calling for mid-70s for the full year. Now, if we take them at their word and they post 75% for the year, that implies 75%. I'm at 73% in 4Q. That would come out to 75.3% for the full year. So 78.5, 75.7, 75, 73. That represents some pretty significant quarter over quarter degradation in gross margins. And that is something that I was in my videos trying to prepare investors for. But I don't think it's priced in. And I'm not sure, it didn't get too much attention on the call today. There was one analyst that brought up the gross margins. So, right now it's all about demand. And I get it. And NVIDIA is a fabulous company, fabulous company. Just one aside, I keep hearing a lot of people compare NVIDIA to Apple, and they say, look at what Apple did with the iPhone, and this is the next great technological innovation. I totally get that. I totally agree. But guess what? In 2012, Apple didn't price in the next decade's worth of earnings growth in a single year. Now that's a bit of an overreach on my part, but NVIDIA certainly has priced in multiple years worth of future revenue and earnings growth in a year. As I said in my prior video, didn't get too many views. Hopefully this video will get some more. But based on my valuation, the fair value of the stock is a range of 106 to 111. That's fair value based on a couple different ways to skin the cat that I used as far as valuation goes, which I'm happy to share. If you guys are interested, please leave a comment. I can do a more in-depth analysis of how I get to my fair value estimates. But for right now, I think the story is demand is great, but the margins are starting to fall apart. They're starting to deteriorate. And so I think over the next quarter, certainly at some of their investor events over the course of the next couple months, they're going to get a lot more questions about margins. Let's see, what else did I want to go over? I mean, if you're interested, we can go over. Let's see, let me bring this more into view. How their results compared to my own estimates going into the quarter. They beat me by 3%. I was at 29.1 billion. They came in at 30 billion. Bravo. On COGS, I mean, it really came in pretty similar to what I was looking at. I was at, I should say, the numbers here in my model, I was using GAAP before. So these numbers are GAAP, not the adjusted numbers. So I was at 75% gross margins. They came in at 75.1. Slight beat, but I mean, that's essentially right in line with what I was expecting. R&D was a little bit higher than I expected, coming in at 10.3% of revenues. And SG&A was right in line with what I thought at 2.8%. So look, operating margin, they did 10 basis points worse than I expected. The margin profile was really just spot on with what I was forecasting for the quarter. But that revenue beat and a beat from other helped generate a 3-cent beat on a GAAP basis relative to what I was forecasting. So I feel pretty good about how I've been thinking about their cost structure, how the business dynamic is playing out. I should say, right, I was an equity research analyst at one of those big global investment banks in New York for over a decade. And so, I've gone through this a number of times with a ton of companies. I mean, gosh, I think I've done, let's say, every earnings season was about 25 companies. So that's 4 times a year, that's 100. So I've done this probably like 140 times, let's say. So you get used to business cycles, you get used to competitive dynamics. When somebody has like a hot new technological breakthrough, obviously, S curves and all that stuff, but you get to see how costs are inevitable. And if I leave viewers with anything, it's that NVIDIA doesn't make money in a competitive vacuum. Everyone has seen their market cap go from, $500 billion to $3 trillion in a heartbeat. Everyone in their supply chain is going to be raising prices. Their biggest customers are developing their own proprietary internal chips. Amazon, there's a fly in my room. Please disregard that. But Amazon, Meta, Google, who am I forgetting? There's just everyone is trying to develop a chip. Microsoft, of course. So net, that's pretty much where it all shakes out. Wanted to leave a quick video. If you enjoy the work that I'm doing, I'd love to get a few more people to like the video, maybe leave a comment and just give me like a hey, keep it up, we'd like to see more. Let me know what company you think I should cover next, and good luck investing out there. Take care.